No questions so far. I don't know if you, Patrick, have questions for me.
No. So the only thing what we was covering is like we was speaking about the screener, how you can use it. We was explain why is this important. We was speaking about the gamma squeeze. I think this is something what is really important for you to understand what data you need on your own side to figure this out.
Yeah.
And the next thing is when we came now to the earnings, and when we're speaking about swing tradings, let's always connect the dots. So last week when we were speaking about swing tradings and we were speaking about earnings, this is something what I was saying before. We was giving you some golden nuggets. Let's look into the last replay what we was doing about this. We was sharing crazy insights. I will speak about how you should use analyst targets. You remember we were speaking about Nvidia, that the crazy analyst was targeting 164, I think, something like this, if I remind. So sorry, I'm an old man, 40 years old. But 165 I think something like this was targeting, and we were speaking about how you can use this as a swing trader with our models. Is this also confirmed? How you can get prepared for this? And this is something what we was sharing to yesterday, the last time, and now we will share also some other crazy stuff.
Yeah.
And this is the biggest important thing. This is only one of the reasons why we're alive. We want to educate you also, but your homework outside, connect the dots.
Yeah. Yeah, and what you see here in this chart is something that's going to come, I think, as early as next week, which is really our swing trading levels on TradingView. So what we saw before is our gamma levels, the one that you see here. Those are obviously very important, very relevant. Our swing levels are tailored for investors who are looking more longer term in the future, 5 days, 20 days. Maybe you are not in front of your screen every morning. Maybe you just want to like get a feel before the market opens, after the market closes, and you want to get an idea where the movement can be. So that's why we developed our swing trading model. So the swing trading model, and let's go back here 1 second. It's basically a model that is available within our membership. And basically you can access it here on any stocks, indices, and ETFs. We have almost 1,000 tickers that are available there. So I can show you now how to get it. Essentially, it's made of 3 components. We have an upper band, a lower band, and a risk trigger. Every day, you're going to see 2 levels, either an upper band or a risk trigger, or a lower band, sorry, and a risk trigger. So the risk trigger is always there. It could be above or below the upper band or the lower band. And the upper band and the lower band will also give you a kind of like bullish or bearish bias. So if you see, for example, a red line here, we see a bearish bias. If you see a green line here, so if you see a lower band, then we see a bullish bias. And the model is, again, it's a volatility model. So we have a 5-day swing, 5-day price band, but it's also like a directional model. So it's looking at things like gamma, delta, other Greeks, momentum, and so on. So to get the level, we can go in our chart, and if we look at, for example, some earnings, so we can start with AVGO, so Broadcom. Here we can look at the swing level on AVGO, so we just type in the ticker. So now we can see the chart. So let's look at the chart in details. So here we have, as of yesterday, so the model will be running again. It's probably going to start running in about 10 minutes. So we have a lower band of 141 and a risk trigger of 163, okay? Here we see how the models kind of perform over time. In this case, we had a 69% success rate for the past 36 days. We define success if the price closes above the lower band or closes below the upper band. So we want to make sure that the model can tell you the volatility of the asset. And why is that? Because that's important for you, because you can know how much you can risk, but also how much you can make and how much you can lose. So it can become a target, it can become an area of interest. So here we have our levels there. We can do the same on all the other companies. So let's look at, for example, our swing level for NVIDIA. So here we can see that our lower band is 98 and our risk trigger is 117, but we can also look at historically how that has changed. So from the day before yesterday, the lower band moved from 112 to 98. And then we can also go back in time and we can see that the lower band 3 days ago was 109. All right, so now, if we go back to the 29th, right, those is a 5-day level, right? So on the 29th, going forward 5 days, that would bring us to the day after tomorrow. This level could still be valid. So the lower band that was provided on the 29th is valid for the next 5 trading days. So how can I have that in my chart so that I can then look at targets, stop loss, profit targets, and so on. So now we're going to have that available here. And this is what exactly we are looking at it when we look at this data. So here we have our risk trigger of August 30, our risk trigger of August 29, we have our lower band of August 29, and our lower band of August 28. So those are the historical, still valid swing trading levels that are available on your chart. And here we have our lower band of yesterday, so the lower band of September 3rd. So again, this can become your target area, like Patrick always shows. This can become your roadmap.
Yes. How much second it needs? So let's check.
So now we have in 10 seconds. Now we have our roadmap for NVIDIA for the next few days, right? So
amazing, yeah. And we can fill the gap with the Fibonacci if the gap is too big. So to have an idea where we are now. So really easy and simple.